Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the Forex market. So today we have a lot of topics for discussion. Actually it was a really big problem and challenge what to make the central topic in today's report. So initially I thought that it might be the Jerome Powell speech, but currently with the recent events in the banking sector in the United States, well, I have to bring a little bit of every actual moment, including the Jerome Powell payrolls and default of the Silicon Valley Bank. Particularly speaking, I think that you will find interesting the discussion of the collapse of the SVB, just because it is not as simple as it seems on the surface. Because this event, Fed could try to use for different options. There are three mostly scenarios that it could follow. First one, it just could simply use it to start quantitative easing and put all responsibility on the market society, telling that we have tried to fight inflation, but take a look, they are screaming to stop it just because we have the problems in the banking sector. And we just following the overall public opinion to turn to the easing. This is most obvious scenario, so we will see what Fed will tell and what it will do. Most probable scenario that I think it is a bit more sophisticated, has relation to global political issues, which could be visually stand in a centralization of the United States banking sector. I think that for some political purposes, Fed could start the process of enlarging banking sector. So to accumulate the major assets in just few banks and actually cut everything others, small banks and mid banks. We explain this subject tomorrow in our gold market report because it has more reliability or relation to politics. Finally, some people think that it might be used to make the pressure on cryptocurrencies, because as you understand, as the Silvergate, as the Silicon Valley, more or less has relation to the high-tech sector, including the cryptos. And they could appeal say that, take a look what has happened. They are dealing with the cryptos. Let's press them. So actually, we already talked about this in our recent report on the fundamental report on the Bitcoin market, where we think currently that the regulation is becoming gradually the major risk for the cryptocurrencies, which definitely will make the contracting effect, holding effect on the industry in the nearest term, in a few months, I suppose, or even more. So just read it what we have discussed in today's weekly report on euro currency and make your own opinion, share in our forum, because it's really interesting subject. Speaking in relation to the Forex market, currently it's very difficult to make a long-term forecast. It's just because we do not know in what direction Fed will start pushing this issue. So we need to get first CPI numbers next week and Fed rate decision. If we will see some weakness in rate decision despite the strong CPI numbers, it tells us that Fed is turning on the road of the quantitative easing in some way. If Fed ignores even big CPI numbers and shows 0.5% rate change, it means that it's coming to strategical scenario, which I think is more probable currently because it is not as obvious and it is long-term, but it relates to long-term interest of the AUKUS bloc and long-term interest of the United States. It's my opinion. So when we will get this information, we could better to say what could happen with the United States dollar. In a shorter term, you could see that performance of the euro currency is a bit tricky, but we have the only answer on any challenge. This is patterns. Whatever is going on the technical side, we need to watch for patterns. On Friday, actually, you could see that first reaction was to the upside, because with the bank collapse and the report on the payrolls, everybody starts anticipate of Fed easing. But later, when you could see the big collapse on the banking sector, including the United States and Europe, investors was just spooked, and actually they have run back into the safe haven. That explains why we see a return back here. So overall action was a bit tricky. In the longer term, within the 5 weeks in a row, market was not able to reach major 30% support. And if you will take a look at this in the way of the hand and shoulders, market can't complete the head. Even we have the OP right there. This is of course bullish sign, and it suggests currently some further upward action here based on this picture. But as you can see, situation currently stands really tricky. Lots of events should happen within the nearest 2 weeks, and we will see what will happen. Currently on the lower time frames, we have to keep an eye on a few moments. First of all, to hold the bullish context, market has to stay inside of this range, definitely hold the lows, but it's more preferable if market also holds intraday inside support levels. And if we will get here, actually we already have some kind of the double bottom, but if we will have here some kind of the hand and shoulders or something of that sort, that might be some challenge on the possible bullish background, and market should start upward action. In general, we could say that euro is standing higher back to the previous top if market taken out of the confluence and erase this daily ABCD pattern. That will be clear confirmation of the upward continuation. But as you could see, it's too long to wait for that, and mostly major part of the action already will be over when we get the final confirmation. That's why currently with a bit stronger risk, higher risk, but we intend to keep an eye on some intraday support and make judgment on the direction based on the market response to this support. Conversely, for the bears, clear sign on the downside continuation will be breakout of all support areas and moving below the lows. It tells you that market still is going to the 104.30 major daily OP target. What direction will be chosen, we will see probably next week. On the hourly chart, you could see these levels. So market has completed mostly upside XOP, now shows the pullback here. This probably could be used as a short-term scalp bread and butter trade if you would like to. This probably not bad for us. In general, it's not really perfect, but momentum was strong and maybe market could show some pullback here. And that's the level to watch for, around 105.90, 106. This will be important. To keep the bullish context, I prefer to see the euro will stay above it. It's just because if it will break it down, it totally will erase this rally, and it also will be bearish. So to keep the bullish context, markets to stay above, and this simultaneously the level where the bulls probably will have to make the decision on the entry. This will be some kind of the invalidation point for the bulls, with the risk somewhere below these lows. So it's approximately around 65 pips. So a bit extended, but maybe it makes sense to place stop a bit close. Maybe below the C point also will be enough. We'll see. And this level will tell us. So downside breakout, as I said, means moving below the A and moving lower to the 104.30. Ability market to stay here, start upward action, could mean that probably market is forming something reversal and at least should make the attempt to break the confluence and keep upward action. So we will see.